Hi folks, we are Wednesday, 5 of March. So I come again, because I used to talk about that in the past. I come again with Eose, E-O-S-E. They released the earnings yesterday night. Pretty positive, going in the right direction. A lot better and more clear than last earnings in November 2024. It was a kind of mess. So basically, and look at the chart and you will understand what I'm saying. Basically, last time during this mess, bad miss in earnings, a lot of delay because container was not available, this and that. At that moment, the price dropped to the 125 moving average, as you can see. Normally, Eose, since Cerberus is in the story, never go under the 50 moving average. It's a kind of pattern pretty clear with Eose. 50 moving average is our support during all the run. The only time we have been going under and find the 125 moving average as a support, that was after this mess of last earnings in November. So actually it's not a mess. It's pretty clear. We have nice contract, nice backlog, a lot of positive things. New CFO with, who have a lot of experience, because basically Eose now is in the phase that to go to scaling, basically. They will need to produce a lot of battery. They have a lot of pending contract, Puerto Rico, this and that, big contract from electricity company, and this will grow rapidly because the demand is enormous. So it's not a problem of contract, it's a problem of producing enough battery to execute the contract and deliver. So I like what I see, honestly, and the fact that the price right now at $4 after touching a lot of support during the day yesterday on the downside, then we pass the 4, we go to 5, 4.6, 4.10 before closing just under $4. Then in aftermarket we have been going until 4.44 or something like that. I really think that if you can get some Eose shares around the 125 moving average, who is at the same time the support of the Fibonacci, it's a double support. I really think that, try to explain, but I really think you may have the best entry price, because honestly, my feeling is that we are going to go back to $5.10 with the 50 moving average. We're going to build a base over there, 5.10, 5.20, around, and from there, waiting for news. News in this kind of company, in this kind of sector, can be very brutal. I mean, we are entering in a situation, in a period, where they can say, from a day to another, we have, 1, 2, 3, because, the more they're going to deliver, and the more they will be well known, and the more they will be in contact with government agency like the military naval station that they're going to produce battery for them. It was a yesterday news, $8 million contract. It's not a big contract, but it's a kind of, showroom. Basically, they can show we can make it. We are an American company. we have the funding from Cyberus and from the DOE. I mean, Eose is in a kind of situation, especially with the Trump policy, where she can be preferred over a lot of foreign company who will need to pay tax and, you know, this story of the new tariff from Canada, China, Mexico, and all that. I mean, Eose is in a kind of sweet spot that they can say we are an American company building in America, etc. Well, what I don't know is that I suppose that some component, some things come from outside, from other company. So we will need to see maybe in the conference call today how this story of tax maybe impact them. But there is so many things going in the right direction. They will have some tax refund, tax exception, this and that. And the fact that in the aftermarket and pre-market we are not tanking show that the market see the same kind of thing that I see. Basically, light at the end of the tunnel. I really think that the most difficult part is behind us, behind Eose, and now it's blue sky, but naturally you need to deliver. That's mean and execute. That's mean that they need to open factory, to have second line, third line, fourth line, and produce more battery because the demand is gigantic. All the electric company, all the solar farm, they all need the product that Eose is proposing. So you need to know that there is 63 million shares short. I suspect that the short have taken that position because they know that there is some warrants who need to be exercised sometime, because a lot of these warrants who can be exercised above $2.15, $3.20 have not been exercised. Vast majority, very small part have been exercised. So one day they will be exercised, and that will bring around 49 million new share in the float. But that will bring the money. Let's imagine a scenario. Eose go to $10. Some warrants, let's say all of the warrants are exercised. You have 49 million new share coming in the market. Short can cover, because there is new shares. They can cover a huge amount of the 63 million with the 49 million from the warrants. And that will bring at $10, $500 million to Eose. So, yeah, we may dilute sometimes in the future, but we don't know at what price. And anyway, that will bring fresh cash to Eose. So, I suspect that the short are betting on this, but they don't know, like you and me, when and at what price. So they keep this huge short position, expecting these warrants to be exercised. So that's the reason, in my humble opinion. I may be wrong, I don't know. I'm trying to think, honestly, with the size of the project, of the backlog that they have, the fact that depending how you calculate the value of the company, the fact we are under $1 billion of value, it's a screaming buy. Now the problem is, it's a story of execution. It's not easy It's not easy. It's not the same, let's say, to how you say, to deal with 3-4 factory with all the suppliers, this and that, container, workers, and only one. Actually, they are all focused on Pennsylvania, the factory that they have over there. Let's see how they are going to manage the company when they have 3 or 4 lines in different place. That will not be easy. Let's be honest. They will need to find the right people. They will need to deliver, basically. You need to know that in this kind of sector, this is huge contract, big contract. So big contract take time because the customer need to have some approval, some DOE grant, some financial organization, the contract need time. But all the signs going the same direction. Eose is in a sweet spot, in the sweet sector. They are doing all the right things. They have the right product. So there is reason to be positive. But why by now? It's because you never know when a contract will be officially closed and appear in a PR. You can have, someday a contract saying we're going to deliver, 400 megawatt to this and that, and then another company, and then you didn't expect this, new clients, because all these people are working over the clock to go to conference, to exposition, to making phone calls with government, with customer, and sometimes things, it's like a domino effect. You have one contract that push another one, then you have another customer who hear about that, who want to have some battery too, and you never know the flow of news. But technically speaking, because I always say in my audio, forget about the story, look at the chart. There is a lot of nice story in Wall Street, in the stock market, but what about the technicals? Personally, a part of Tesla, naturally, I don't really know another US company with this kind of product in the same sector who have all the support Eose have. Support from the DOE, support from Cyberus, access to funds, huge contract, etc. I don't really know. So in my view, they don't really have competition. They may have from some Chinese company, but you know what's going on with Trump and the Chinese and Mexican, Canada and all that. And I really think Trump is going to support and give the priority to US company. That's logical. So it's a little bit foggy right now, all this story, but we can suppose that Eose have an advantage. They have an advantage. Now, just it's a kind of conviction now, question of confidence and faith that these people will be able to hyperscale and becoming, the number one US supplier of energy storage container. I think that it's a good bet. Personally, I used to trade, with some ticker just for 1 week or something, depending, the news, the volume, and all that. But for example, when you take CLOV, CLOV, when you take a NEO from China, the car manufacturer with the swapping battery. That was my last video. And Eose, I like the profile of this kind of company because they have specific products, they are in a specific sector, and they are undervalued. Actually, you can buy Eose at $4. You can buy Neo at $4. You can buy Clove at $4. They are all around there. And remember, the big institution, until you don't pass the $5 and you stay above, sometimes they cannot invest in this kind of company. They need, for some reason, that you have some level of price of market cap in order to invest. So Eose is in this category of company like Clove and Neo and others that I personally like as a long-term holding. There is no doubt in my mind that Clove, Neo, Eose, when you will come back, let's imagine you take a trip, a holiday of 5 years. When you come back and you open your PC, I'm convinced you will find all this company at $50 per share or something like that. I really think that short term it's difficult, but long term, if you take a 5 year expectation, all this stock will be like a 10 bagger, something around that. They are growth company at the very beginning of the growth. They are taking market shares. I mean, look at Neo. I mean, Neo is really near catching Li Auto and Xpeng in a near future. Everybody know that. But the market cap is a lot less than the two others. Clove is taking market share from big Medicare company. Everybody know that. And Eose have this kind of profile of specific company in a specific sector where they have no real competition. And the demand is so huge that, they don't need all the market. They cannot supply. So even if they have a small part of the pie, it's a long-term, in my humble opinion, it's a long-term 30% growth, annual growth company. So what's the meaning of that is that when they are going to have, let's say, $1 per share earnings annual, this can be a $30 stock because high growth, and it's just a question of being positive. It's like Neo. Neo need to be positive. When they are positive, they will be, recalculate and have another value. They are very similar, Neo, Clove, Eose. They are not profitable, but they are in great shape. They are in the right price. So they are still cheap because they are not EPS positive. When that happens, that will change the whole story. You will have Clove at $15, you will have Neo at $20, you will have Eose at $30, and all this movement from 3 to 4 to 4 to 5, 5 to 4 will be forget. That's now near term. Clove, if you remember, have done exactly what I was saying, and everybody was spitting in my face in the internet. I was saying the $4.8 was short covering. Now they need to consolidate, and we may face some kind of drop because basically the run was fueled by the short who was covering. Now that they have cover, it's only a story of institution buying, selling, retail, and the price will take a hit. Now yesterday we was trading between 3.5 and 3.8. it will take time to pass $5. In my opinion, it may take 3 to 6 months, depending the news. So short term, all these stocks are manipulate, shorts trying to push the brake and then buy and then sell. But long term, all the way is up. So, the question now is to find the best entry price in CLOV, in NEO, in EOS. When you lock that, because for example, you can say, okay, right now EOS is fully valued because we are at $7. CLOV, it's still at 3.5. I may switch to CLOV, and then I will get back to EOS later. All depends, Actually, CLOV is the kind of medium, not bad, not good. I talk about the price. I think NEO is at the super bottom, and I think EOS is a growth story with American related, and basically when it's the growth story, the price can go up very quickly. Honestly, my target, if you ask, I see EOS around $7+ in the summer, maybe $10 at the end of the year, something like that. CLOV, I think it will take some volume and some pretty good news to pass the $5. NEO, I think is going to $10 once everything's go in the right direction in terms of delivery, and all these things. So all depend the price. If you tell me NEO is at $10, I say okay, that's with 2 billion share running around, that's a $20 billion market cap. Okay, it's a little bit expensive now. Not at $4, $10, yeah, maybe not interested. Not because I don't like the company, because maybe, expensive. If you tell me CLOV is falling at $2.05, I'm buying all I can. If you tell me EOS is at 3.35, buy all I can. Depend. But actually, if I should make a kind of choice, I will say EOS number 1, NEO number 2, CLOV number 3. But I think that the 3 company are great. They're very great company. But depend the price. Depend the price. It's not the same to buy CLOV at $1 or buy CLOV at $10. CLOV was at $10 in 2021, and it was at $1 during the summer 2024. So all depend. It's not the same. NEO used to be in 2021 $30-40 per share. Now it's $4. It's another story. EOS was ready to file for bankruptcy in June 2024, under $1, ready to be, out of the picture. Then cyber is coming, money coming, bam, 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 and the stock have been going from $1 to $6.64, because you need to know that 40 days ago, EOS was at the high of the day at $6.64, with not all the good news that we have now. So it can go very quickly for a company to go like EOS from $6.64 to $3.7, $3.6. So $3 per share less in 40 days. Why? Because the market was fearing the earnings, another miss, another problem, and they decide in February, knowing the earnings coming in March, to basically pull the plug And then the price have been going from 664 to 35, 36. Now that they see that the earnings are okay, there is no bad news, in my humble opinion, they will bring it to 510 pretty quickly. And from there, we're going to go to the $7 direction. That's logical, that's logical. And I understand with the huge miss of November that market maker was fearing a miss. And when we touched 664 at the end of January, in February, they say, okay, earnings are coming in 3 weeks. We're going to drop. And some retail or big owner have done the same. They say, okay, I've made some profit here. We have been running from $2-3 to 664. Let me take my profit. Let's see the earnings, and I will get back in after the earnings. So that's why I think we are going to go pretty quickly to 510. And from there, build the base and go to catch the $7. That's my opinion. I may be wrong, I may be right, not financial advice. Only trying to be logical. And let's see what happens. Trade safely. Thank you.